Hey. Hello, everybody, and welcome to another episode of Scotch and Stocks. In today's episode, we're going to be looking at PPI, which could dampen the party that we've been having lately in markets. Yesterday, we did bounce back, close the gap in the S&P 500 and the Nasdaq. It was quite a day for investors, so I'm glad to have been there and hopefully set you in the right direction to make some money. Bam, bam, bam. It was fantastic. All right, let's choose. It's cold today. Ugh. And then this could potentially clear the way for the rest of the week to continue up and for us to break 530. But yesterday we did, but we give it all back. There was a massive whoa. There was a massive sell yesterday, yeah? Something to take note, 1.5 million. Is that normal? It's a big number. It's a big spread. Whoa. BTC. What am I looking at to trade today? Can I do TQs? Just to, just to pay attention to. I know that they're a bit down today. Sitting in 84. That Uber trade, man. Uber is showing an entry point. I want to have a look. I want to do a little bit of research in Uber. We got 4 minutes. Yeah. Uber P ratio. Let me have a look at this real quick. Uber's sitting at 31. It could potentially go down a little bit lower. No, I don't want that. Sitting at 35. Uber was high, yeah. This is not good. Might be a good entry point though. I'm feeling if we can hold 60, 65, it's definitely gonna be good. It's definitely gonna be a good point. Oh man, it's been so difficult to wake up. Man, winter sucks. Unless you're on on a snowboard, winter sucks. Expectations for PPI today are sitting at, well, we're 2 minutes away. It's the beauty of it. Sitting at 2.6%, so we're expecting to tick up a little bit. This shouldn't freak out markets, but it could. Price data in here. It's just such a big company too. But this is rough. Just because of the robo taxes in the next 2 years. Insane. They have the infrastructure ready. What stops Tesla from being like, hey, how about we just buy it? We don't have to build it, we just buy it, right? So, or Uber just being like, hey, how about we just buy our own taxis? This is looking good. Keep that in the watch list. Obviously, with it, one of the problems is the we're a minute away from market data. 30 seconds. It was quick, fast 30 seconds. Nobody pays attention to the PPI, but I think this is important. Important number, ladies and gents. 4 seconds. Ooh.
3%, 3%. That's higher than forecast 2.6%. Month over month, 0.4%, 0.4%. Higher than
Crap.
forecast 0.2%. Core year over year, 3.4%, 3.4%. Higher than forecast 3.2%. Core month over month at 0.2%, 0.2% as expected. Jobless claims, weekly initial 242k, 242k, higher than forecast 220k. Continued claims 1.886 million, 1.886 million, which is lower than forecast 1.877 million. So that's higher than forecast. So looking to the market reactions here, weakness in the dollar, whipsawing in the S&P 500.
Well, that sucks.
Making note of the prior revision, initial claims prior revised up
Yeah,
slightly to
but minuscule.
225k from 224k.
The dollar's down. Good thing we got rid of it. In theory. No, dollar is getting stronger. What are we talking about here? Oh man. I need to turn on a couple of things here. Damn. Do I have Australia here? Do they have data? It's the only reason why they would come down, no? Hmm. What? Pound's coming down quite drastically. This might not be good for markets for the rest of the day. I mean, unemployment, initial claims makes it so we're potentially continuing the cut, but then this is inflationary, and that's not good. I'm surprised the core PPI came in. The year on year comes higher than the expectation. That's weird. Interesting. Very, very interesting. I think I have to exit a couple of positions today. Hmm.
So noting the prior revision on US PPI month over month as well, revised up to 0.3 from 0.2%. Revisions for the rest of the PPI numbers coming through now as well. PPI year over year revised up to 2.6% from 2.4%. Core year over year revised up to 3.4% from 3.1%.
Huh. It's not good. This is not good. I don't like that data. Um,
US short term interest rate futures pair earlier losses after the data as traders add to bets on Fed rate cuts next year.
huh, not good data. Find the bottom, bounce up, and then sell out. That sucks. That pretty much sucks.
Seeing data out of Canada, their Q3 national net worth falls 20.7% to 18.95 trillion Canadian dollars from 19.08 trillion Canadian dollars that was in Q2.
Order cancelled.
Give me that bounce and then we get out. Oh, there. To go in what 525? Really? We're gonna give that much? Crap. Yeah, we could. Huh. Oh man. Hopefully we get that bounce, but man. That is not good today, guys. That is not good today. Hmm. The problem is we got revisions too, so that means that it was worse than expected. Damn.
Order filled.
We're bouncing up. So look. Could be. Found the bottom maybe. Hmm. Oof. Portfolio hurts. Portfolio hurts. Ooh. So there's two key data points that come in worse than expected. Let's have a look here. This one and this one. Initial jobless claims is not good. That just brings in fear recessions, like recession fears, which could dampen the outlook heading forward. What's the Dixie doing? Hmm. We're not getting live data here? Weird. Ooh, ooh, ooh. Can we see a pump in the VIX? What else? What did it? What else? What other data do we have tomorrow that could? Hmm. Just to risk, just to summarize here what's going on to give a little like sneak peek to everybody that wants to watch. Just to summarize here what's going on. PPI data seems to be worse than expected. There were upward revisions in the prior months, which makes the market believe that the inflation story is not gone yet. This could cause future damage in the economy and cause inflation to rise off and pick up again, which is not what the Federal Reserve wants. So maybe they might just start changing their rhetoric next week and going into a little bit more hawkish stance, which is what might spook markets. I mean, yesterday we had a pretty strong upward trend. Um, we seem to be correcting that, and we're likely to correct that until the end of the day. There was another key piece of information that came out, which was the give me a second. It's here. The U.S. Jobless claims, the continued and the initial. The initial comes in strong, like higher than expected, which is not a good sign given the fact that this is data for November. And that's when a lot of people from the US elections start coming off their jobs, and the continued jobless claims continues to be high or higher than expected, which is not a good sign. It's not an indicator just yet, but it's something that we must pay attention to. So markets are likely to come down. The initial reaction was that the dollar got a bit stronger and the S&P and the Nasdaq came down, and that has continued throughout. I do believe that might, we might see a little bit of a correction from yesterday's highs. Nothing, not going anything to the lows or anything, but again, we could see some consolidation around these levels just to until we start getting more data. Tomorrow we have nothing that could spook markets majorly, at least in the US. We have UK data that's going to give us a little bit of an idea of how the top world economies are doing. We know that China is right now hurting. So the UK, it's going to be interesting how they are weathering the storm, because usually when the United States coughs, the rest of the world catches a cold. So it's something definitely to be paying attention to, as this can have effects in the U.S. economy. But yeah, so far right now it seems pretty muted. I mean, it's going to be interesting to see how big hedge funds price this in. I know that inflation is still a fear. Um, Bitcoin barely moving on this news. I mean, we are seeing some movement, but nothing too crazy in the Bitcoin range. On the Nasdaq, we pretty much, we couldn't beat that resistance of 530, so we're now potentially coming under that. We'll see how that performs and how that behaves. But yeah, I mean, S&P is behaving okay. Maybe early exit. Thank God I have a couple of options contracts that might revalue themselves. Maybe we got gap up a little bit. People might take this as an opportunity. Again, it's an indicator. It's not a certainty that inflation is going to rise up based on this, but you know, there continues to be more and more data that starts showing those yellow lights, and then those yellow lights might turn into red lights really quickly. So it's something we are definitely paying attention to. But it seems that the Christmas rally is still underway. So thanks so much for watching, and peace out, guys. Stay goddamn sexy. All right.